My name is Siew and my machine number is 300-256. Today, I and my teammate are going to give a present about the ratio between the capital A Berhad and Asia brand Berhad. Before we start presenting the topic, we need to know what is financial report. It is an information system that records all company activity, and this is important for a company to have the external decision makers such as investor and internal decision maker such as management and executive to assessing their financial health and performance of a business. Capital A Berhad, as known as AirAsia, the largest and the cheapest airline in Malaysia. In 1992, there are still a lot of people in Asia that who are able to afford the air transportation service because it is too expensive for them. So the AirAsia began its journey with a clear mission to make the air travel accessible to everyone. This was founded by the visionary entrepreneur Tony Fidance in 1993, and the company having the low-cost airline that providing the basic air transportation service to the customer and become the championing airline company in Asia. ASEAN brand Berhad. ASEAN brand Berhad has about 30 brands under its portfolio, and it was established by two brothers, Ng Dong Seng and Ng Tiong Leng, together with Taiwanese partner. And ASEAN brand Berhad present in baby product, innerwear, and costume in Malaysia, and the Anaku was the most famous baby product in Malaysia.
My name is AINA NASUHA binti MOHAMMAD SABIRIN and my number matric is 300264. So I would like to present about our first ratio. Our first ratio is liquidity ratio. Liquidity ratio is measuring the ability of a company to pay its short-term debt obligations. So we have two liquidity ratio. First, current ratio, and then we have a quick ratio. Next, I would like to explain about the current ratio. Current ratio is measuring the ability of a business to clear all current liabilities according to the set time. So the formula of current ratio is current asset divided with a current liabilities. Now I would like to explain about the difference of a current ratios by two companies in year 2022. So here we have a company capital A and company Asia brand. So after the calculation of a current ratio, for every RM1 for current liabilities, the company capital A only has a current asset for RM0.17 cents, and for the company Asia brand only has a current asset for RM3.41 cents. So the difference of a current ratios by these two companies is RM2.34 cents. So based on the result, Asia brand have a better ability to cover the liabilities in a short period of the time compared to company capital A. Now, I would like to give a suggestion for company capital A and company Asia brand to have a better current ratio. For company capital A, they need to reduce the expense, try to cut down the spending, and try to review the budget and find where you can reduce. For example, the line item, and they need to limit the personal draw on the business. Then for Asia brand, they need to enhance asset management. They need to try to manage the unused asset that do not create a return to the company. Lastly, they need to selling the unused asset, then increase your short-term asset column. I would like to talk about a quick ratio. A quick ratio is measure the ability of the business pay off in short term when it demand or anytime desire. So the formula of quick ratio is current asset minus with inventory to get the quick assets, then divide with a current liabilities. Then you will get the. Now I would like to explain about the difference of a quick ratios by two company in year 2022. So here we have a company capital A and company Asia brand. So, after the calculation of current ratio, we analyze that for every RM1 of current liabilities, the company capital A has RM0.50 cents for their current asset to pay off. And for Asia brand, they have RM1 12 cents for their current asset to pay off. So, based on the result, the difference of quick ratio is RM0.97 cents. This means that the ability of Asia brand is better than a capital. I would like to give a suggestion for company capital A and company Asia brand to have a better quick ratio. For the company capital A, they need to decrease the inventory, start with selling the out-of-date inventory, and they need to improve inventory management and try to decrease their current liabilities. And lastly, for the Asia brand, they need to improve the collection period that will immediate effect on the quick ratio. Then, they need to minimize the credit of period because it is imperative that the payment terms are clearly communicated from the out.
My My name is FITRAH Natasha binti Mak Badrul HISHAM. My metric number is 300192. I want to talk about activity ratio. Activity ratio, efficiency ratio and activity ratio are used to measure the performance of inventory, to see the stability, the company operation and to compare two different business in the same sector. Activity ratio are calculated in two types, which is total asset turnover and account receivable turnover. Formula for total asset turnover is net sales divided average asset turnover. Based on the result, a sum brand Berhad is higher than a capital A. Ratio for capital A is 64370 C8 divided by 199,78705 equal to 0.32. It means every RM1 asset will be earning as much as 32 cents. Besides that, ratio for Asam brand Berhad is 170,127 210 divided by 289,410,613 equal to 0.59. It means every RM1 Asam brand Berhad will earning as much 59 cents. There are several steps that can be taken to increase the total asset turnover for capital A companies, such as improving inventory management better. For example, the company needs to optimize the management of stock supply to avoid the occurrence of excessive stock dumping by using economic order quantity to help compute order as much as possible in order to arrive stock supply based on the monthly sales result. For Assam brand Berhad company can accelerate account receivable, for example, sending a payment reminder before deadline. This is to give notice so that customers do not delay the payment period that has been set. For example, the company send a reminder email to complete the payment to the customer. Below for account receivable turnover is net sales divided average trade receivable. Based on the result, capital A is higher than Assam brand Berhad. Ratio for capital A is 64370 C8 divided by 486,444 equal to 30.23. It means every RM1 capital A earn as much as RM30.23 for net sale credit. Besides that, ratio for Assam brand Berhad is 170,127 210 divided by 250,05089 equal to 6.80. It means every RM1 Assam brand Berhad will earn as much as RM6.80 cents for net credit sale. Suggestion for capital A company is to increase account receivable turnover, such as use electronic billing and online payment. By using electronic billing, the customer may minimize error in record keeping and save record automatically. In addition, all final transactions are automatically recorded by the system. For Assam brand Berhad must also pursue proactive payment collection. This is because the business may get in touch with the client to remind them the payment deadline. The service as a reminder to the customer to settle any past due balance and acknowledge that they have missed the payment deadline and will incur future fees if they fail to make their payment.
My name is Lily and my metric number is 300114. Today I want to talk about profitability ratio. Profitability ratio is one kind of financial indicator that business use to evaluate and analyze their financial performance. It can calculated by profit margin on sale and return on common shareholder equity. Profit margin on sale indicates how well the business is managing its finance overall by comparing profit to sale. The formula of profit margin on sale is net income divided by net sales. For capital A, Berhad is negative 0.51. This means for every RM1 of net sale, the net income earned is a loss of 51 cents. For Asa brand, Berhad is 0.12. For every RM1 of net sales, the net income earned is 12 cents. Based on the result, profit margin on sales of Asia brand Berhad is higher than capital A Berhad, which is 0.63, comparing these two companies. The suggestion of capital A Berhad is reducing operating costs. Capital A Berhad need to keep an eye on expenses and identify ways to reduce costs without stressing the quality of output, such as reduce utility bills, wage, and rents. The suggestion of Asia Brand Berhad is raise price strategically. Asia Brand Berhad need to analyzing market condition, customer preference, and the competitive landscape, and increase price without compromising customer loyalty or market share. Return on common shareholder equity can compare the amount of money common shareholder receive from a corporation to amount they initially invest. The formula of return on common shareholder equity is net income minus preferred dividends divided by average common shareholder equity. For capital A, Berhad is 0.73. This means for every 1 ringgit of common shareholder equity, the net income earned is 73 cents. For Asia Brand, Berhad is 0.06. This means for every 1 ringgit of common shareholder equity, the net income is earned 6 cents. Based on the result, return on common shareholder equity of capital A Berhad is higher than Asia Brand Berhad, which is 0.67 comparing these two companies. The suggestion of capital A Berhad is use more financial leverage. Financing through debt and equity capital and increased return of its common stockholders' equity. Financial leverage increase capital A's return on common shareholders' equity as long as the after-tax cost of debt is less than the return on common shareholder equity. The suggestion of Asia Brand Berhad is increased profit margin. For example, Asia Brand Berhad can increase the price of each product sold, lower the cost of goods sold, and reduce overhead of a combination of the two.
My name is Siew. My matrix number is 300189. Today, I would like to talk about the leverage ratio. The leverage ratio is a tool that shows how much of a company must borrow the money to purchase an asset and raise the capital. And leverage ratio are calculated in two types, which is debt to asset ratio and debt to equity ratio. The formula of debit to asset ratio is total liability divided by total asset. So for the company capital A Berhad, the calculation is 1.48. It means every 1 ringgit asset given by the company is still owed as much as 1 ringgit and 48 cents. For the Asia Brand Berhad, the calculation is 0.20. It means every 1 ringgit asset given by the company is still owed as much as 20 cents. The suggestion for the capital at Berhad are restructuring the debt. If a business pay interest rates on its debt are generally high and the present rates are low, it can consider as refinancing its current debt. It will maximize the company cash resources, capital reserve, and productivity on the bottom line by minimizing all loans. The suggestion for the Asia Brand Berhad are proper management the inventory. A company will be affected by taking a large amount of the working capital. In order to evaluate how well inventory is managed, the organization might go through with the days of inventory holding. By control inventory effectively can make a company to be more stable. The formula for debt to equity ratio is total debt divided by total shareholders' equity. So for the capital at Berhad, the calculation is 3.40. It means for every 1 ringgit of equity, the total debt is 3 ringgit and 40 cents. For the Asia Brand Berhad, the calculation is 0.25. It means for every 1 ringgit of equity, the total debt is 25 cents. The suggestion for the capital at Berhad are pay down all loans. When a company pay off the loans, the ratio will begin to balance out and to be more stable. The manager must always make sure no any addition debt will do can harm and can raise the debt to equity ratio. For the Asia Brand Berhad, it can increase the profitability via analysis of financial statement. Company can evaluate the quantitative data on revenue and cost provided by financial statement. By making an analysis of cash flow, income, and balance sheets is helpful when trying to balance the profitability of the company.